Unlocked, and we are here on April the 14th, 2020 with the live Forex market breakdown and daily market analysis for you. We also have some trading signals that are going off today. We have a fresh signal that was triggered in the U.S. dollar Mexican peso currency cross. We had a high probable Japanese candlestick pattern signal actually triggered. And if you want to learn how to trade these signals when they happen and in any market, whether it's Forex, futures, stocks, options, read the book. It's available on Kindle and paperback version on Amazon.com. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, let's go to our www.forex-trading-unlocked.com website. We have the workstation page already pulled up, and I have the dollar index chart pulled up. As you can see that yesterday the market continued, or the index continued to pressure support. The dollar is under a little bit of pressure, following through from last week's sell-off. The major currencies, the pound, the euro, and the Swiss, the Japanese yen, you'll see how they're all shaping up. But what we do have is we do have a signal in one market already, brand new one. So let's see how the dollar is faring versus the other currencies. We're going to start out with some of your lesser currency crosses, and there's a reason why, so you can get an idea of where dollar strength and dollar weakness isn't. Dollar strength is obviously in the U.S. dollar TRY, Turkish lira, making new move highs again today after it was buffering up against resistance. Probably a reason why, if you look at here, we have the statistics for the coronavirus going on right now. Obviously, the United States is in front with over 500,000 cases, but Turkey has now moved to, let's see, we are 1, so 2, 3, 4, 5, 6, 7, 8, 9. Turkey is now number 9 for cases in the world and growing, and it's now right behind Iran. These two, at the rate they're going, will probably pass China in the next few days to week. While we're flattening out, it seems, in the United States, in places, Spain, Italy, and Germany, and France, they all announced that they're flattening and that they're trying to get back to normal life again. Supposedly that's the rumor. So we'll see how this is going to affect the dollar. But right now, dollar strength remains in this currency. I would not buck this trend even if dollar weakness starts to prevail against the major currencies. As long as the virus still fundamental is moving forward and the curve is not flattening in Turkey and in Iran. Iran is too close and there's too much in that region where there's a lot of the borders are just not good, and it's causing probably one of the reasons why this problem is growing still. So we'll monitor that. So the bulls have control over that. But now let's go to the U.S. dollar Mexican peso, where this market has been a raging bull against the peso ever since the last month and a half. Been a little choppy the past since the end of March, but we had a bullish engulfing line buy signal triggered yesterday. So now the market is slightly lower, very tight range today. It looks like it's consolidating. Maybe it is, but right now we do have a bullish engulfing line buy signal, and under these conditions, it does have us looking for a nice play back up towards resistance, probably up to this 25 peso area, or even for a challenge of this 25.77 area. If we get above there, now here's another thing going back to the coronavirus. As we look down, you see where Turkey is. Well, now let's go down here and we'll go down to find Mexico. This is not a good statistic. Mexico now is at 5,000 cases. Reportedly, the cases there probably are understated, and especially since they're coming out feeling the effects of spring break, it's due to most likely continue to rise. That would support this fundamental and probably give us a reason to see that the bulls are going to make a run again for this higher levels. So you have a low risk play right here, and I would say that if you risk the low here at 23.25, this would probably be the extreme for what you would want to do for any risk. So it's not that big of a play, with the potential to catch a nice move yet. Now let's look at the U.S. dollar Canada. Now, as you can see here, we're going to start with this currency cross, one of the majors versus the dollar. In this one here, we do not have very much dollar strength, as you can see. Today it's slightly positive. We're inside yesterday's range. We did not probe a lower move low, however, we did yesterday after gapping lower and testing support. The question is, are the bears going to take a hold of this thing? If the U.S. dollar is truly weak, then we got a good chance to fill this gap down here. I mean, this could be filled. All gaps eventually get filled, right? At least that's how the theory goes. The trend is definitely lower. We have made lower move low, a lower move high, a lower move low. Well, yeah, this was originally a higher move low, then a lower move high, and a lower move low, offsetting the bullish trends to at least be neutral. So right now we're waiting for a signal. I'd be very leery already being a bear. You don't want to sell in the hole, but yet we could still see a big break. But there's also a consolidation pattern. As we looked at the dollar index to start out this webinar, you saw that it is starting after all this volatility in the past month and a half. It's like a big spiking EKG, and now we're starting to get back to that little baseline that we're hopefully going to have for the heart rhythm of the markets for what's going on with this fundamental with the coronavirus. Hopefully that starts to wane and disappears as fast as it came into our lives. But right now it doesn't seem to be the case. So we're waiting for a signal in the U.S. dollar Canada. So now let's go over to the Asiatic part of the world and see what's going on with the U.S. dollar yen. So here we have U.S. dollar definitely having weakness against the yen over the past week and a half too, but it is still hovering above newer move lows. So right now we have made a lower move low with the lower move high, a higher move low with the lower move high. So this is a very indecisive market right now, and we're trading right around this at the lower part of a range that we've been in for months if you take out this COVID spike that we've had. So if support starts to come in, this is a low risk play for bulls. I think that if you want to range traders, if you're looking for it to be sideways to higher, you have a low risk area to buy into against this low here. From this swing low, though, if we fail here, I think you're going to be hard pressed to find support for a little while. We'll probably get back down to this 105, 104 area before we start to see any more strength. But remember, we could have a balloon underwater rally like we had here, and here. So we had 3 sessions in 2 weeks where this market just exploded. I mean, you're looking at $3 moves at least, basis points, full basis points for the currency in a day. So be cautious. Use these. Be very mindful of these levels here, and then even bearish here. I would say if you get a rally above this high from a week and a half ago, that's the sign that we're most likely going to be going back towards this upper part of this range. I mean, we had a longer term target no matter what this market was doing in pre-coronavirus, that even with dollar weakness, we were predicting a dollar yen to be up around 112.5 to 113, and we fell just shy of that back in February. So we're looking to see how things are going. Overall, this is wedging. We're waiting for a signal. We don't have anything right now, so we'll just have to wait. We did have here last week, or a week and a half ago, we had this bullish engulfing line buy signal, which had fallen just short of our target, and now it's come back. But also it hasn't taken out the risk level either. So obviously this trade most likely is over. The signal had run out of gas, and now we're leaning on support. But since we haven't made that, taken out that low, if we reverse gears over the rest of today's session and tomorrow, then who knows? Maybe we'll start to see dollar strength come back. So if the dollar does gain strength, be very mindful of the fact that this could explode to the upside. And remember that we are coming off the Easter holiday. The U.S. markets were open yesterday, so were the Asian markets, but the European markets were not open yesterday, and now they are. Well, now they're closing for today. But so we're absorbing the trading of the holiday weekend as well as the fundamentals with the coronavirus. I would say that probably coming into Wednesday's trade is when we're going to really start to see the market swing and get some action. So right now we're still in this consolidation phase right here. Let's look at the Australian dollar, US dollar trade. Now the funny thing is that of all the currencies that are really showing strength against the dollar, it's the Australian dollar that just keeps on plugging new move highs, inching higher, trying to regain itself. Remember when we had this wild volatility, this market was, look at this, how tight these ranges were before. This, when you look back at the last quarter of the year last year, from September all the way into February, we were in a range trade from 66 up to 70, with basically the bulk of the trading bouncing around the 68 even area level. Now look at how far we've dropped off. We got all the way down to this just around, what is it, right around the 55 even area, and now we're back to 64. So we're right in the middle of this part. Now if US dollar weakness really is prevailing and the coronavirus is starting to really truly fall apart around the globe, well, this is good for Australia because it's good for China and global production, which could help them out. But if there's another round, or if this actually starts to, and if the curve inflates in Australia, don't be surprised if we see a big sell-off. Remember, if you look at this, even though we're in a nice corrective move over the past month with the Australian dollar, US dollar, overall this trend is lower. We have made consecutive lower move lows and lower move highs. It's only in the last month that we made a lower move high, a higher move low, and now higher move highs. So if we start to run out of gas, which is very likely, remember this trend has been lower. We're probably going to start to buffer into some resistance. Remember that this trend, once again, has been down. So we're coming right into this downward sloping resistance, right in the heart of this range trade area. So we'll key off this and see how it goes. Wait for a signal. Right now we don't have one, so we'll have to follow along and just wait and see. Patience. Always wait for your signal. Use discipline. Don't just put things on in the market just to trade. Otherwise, you're going to end up losing money. Now, New Zealand dollar, US dollar, ironically, which has been trading pretty much in tandem with the Australian dollar, US dollar, is showing something a little bit different. It hasn't made higher move highs as strongly as the Australian dollar, US dollar has. Now, what it does look like is really getting ready for consolidation, which is very likely. We might be coming into a period over the next month or two as things start to come online. We're waiting for the United States to come online. See if the curve truly flattens. If it does, then we'll have probably more indication of where we can get some market direction come the summertime. If not, and things start to continue to stay in limbo, or let alone if the curve continues to steepen again, well, then we're obviously going to see probably a leaning back towards support. So I think the dollar is very mixed right now against most of these currencies. We're trying to balance out the volatility that we've had over the past month and a half, kind of stabilize things. I think we're still finding some trends. Obviously, the dollar right now is under the gun. It's under pressure. But remember, currencies like this, the New Zealand dollar, Australian dollar, currencies like that, they're much more sensitive. And they also had hit more extremes than the other major currencies did. Remember, even though the pound had its big volatility, which we'll get into, all these other currencies started first. The dollar bull was slapping these currencies around for a month before it started to hit the majors. So that's a big deal. You got to remember that. Take that into account. Sorry for not shutting off the phone. Forgot that one, but that's all right. So now let's go to the US dollar CHF. We're going to go to the US dollar Swiss to see what's going on in one of our major currencies for flight to quality. Just like the yen, that's a big deal. The US dollar Swiss is coming off of support. It's still lower on the day. We had a bearish engulfing line sell signal. It had hit our targets already. Yesterday, actually probably on Friday, is where it touched into the zone. Now it has fully completed its target. Are we still bearish? Well, yeah, we're still bearish because overall this market is in limbo to showing signs that it wants to go lower. And as far as trades, we don't have any options trades on yet this week, so we don't need to pull up the Nadex binary options. We don't have any futures or futures options trades on. We are still short the US dollar Swiss from last week. We have continued to lower our stop once again today. They're profitable trades. Our stops are where they're at. Depending on how we settle today, we will probably lower our stops another few pips at least, and especially if we get a major sell-off going into the end of the session into tomorrow, we'll probably lower them even more. The same is for the Euro US dollar, which we are long. You can see here on an MT4 platform where our longs are in and where our stops are at right now. So right now, they're hanging right there. We'll leave it where it's at. We're just going to adjust those stops. Right now, we're happy those are winners. We're riding those signals that were triggered last week. However, they've completed and hit our target zone. So in our regular accounts, they're already out, except for we've cut back the position. But for those who follow our signal service, these are still being managed, which we don't want to cut our profits too short. We still want to ride basically the trade until it goes out. With this volatility, we've been blowing past our target points so quickly that it's not it doesn't behoove us to get out right away. So we keep on managing these trades. Like I said, we're adjusting our stops. They're already in profit territory. The question is how much more of a downside move will we get in the US dollar Swiss? Well, let's take a look at the Euro US dollar, which is trading just the opposite way. So this market also had a high probable Japanese candlestick pattern buy signal that was triggered last week on the same day that the sell signal was in the US dollar Swiss. Ironically, they both have made higher move, have extended their trends from those signals, the euro being one also. Now notice that it has broken the downside trend, if you considering the volatility that we've had as late. But it could be more just that it is going into neutral, and this would be a good thing to think about. When we originally had this downside correction here, and now we've bounced off this with this bullish engulfing line, this is setting the range, I think, for us to stabilize in. If the euro and the Swiss are starting to become strong because supposedly Germany and Spain and France and everyone is starting to try and work towards getting back online. Their curve supposedly is flattened. If this is truly the case, that is strong for the euro, even though the euro wasn't looking that strong versus the dollar before all of this. But if they're ahead of our curve, that in the short run is good. It's also dollar weakness, not so much because the dollar is weak, but because the dollar has been such a bull for the past month and a half, 2 months, and then we had obviously this erratic volatility, in which case over the past month we have nothing but indecision. So, but we're waiting for a signal. We do have the one buy signal that has helped us hit into our target zone. It is complete. Like I said, we've raised our stops. Now we're just going to keep on managing them and let them ride. And we're waiting for a signal. So we don't have any other signals to go. But let's take a look at the British pound US dollar. Now remember, the euro is one of our biggest weights versus the dollar index. So we have the euro that is strong versus the dollar. We have the Swiss, which is strong versus the dollar. We have the Canadian, which is strong versus the dollar. We have the yen, which is strong versus the dollar. And here the number 2 component making higher move highs once again is the British pound US dollar. Now remember, Boris Johnson, excuse me, wrong country, wrong time. The British pound US dollar had been holding up very strong for a long time going into the 2020. All of this volatility came in March when the market had gone from a sideways to sideways slightly bearish trend into an extreme sell-off pattern. Now look at this volatility. Now we've settled into the middle of the range, and except for the past couple days, now we've finally breached. And I want you to be mindful of this. Yes, we have finally made a higher move high. We are showing that this bull is still in place, but it's only been over the past couple sessions. As a whole, we've been trading in this area. Even if you go back to March, you have the bulk of the middle of March into the middle of April. We've been trading between basically 121 and 125. Still a big range for the British pound US dollar, but this is where we've been. Now we're starting to see that this is coming back towards the lower part of where we had support that was holding up the market. Now remember, this is the area that was holding up the market for so long. Let's put this in here, make it a little bit easier for you to see. See how fast we do this live. And there you go. So we are trading below this 127.59 pivot. This, remember, had been support holding the market up. Don't be surprised if this doesn't become resistance. We may go back to the way things were once this fundamental of the coronavirus is gone. I think we will, but that doesn't mean it's going to happen on a dime and happen overnight. We still have a lot of things to cover and get through. The curves have to be flattened. And remember, once again, when we go to these coronavirus targets, look at where the UK is on this thing. So I want to show you something. We have the United States. The United Kingdom now is 1, 2, 3, 4, 5, number 6. They were way down there before, and their death rate is very, very high. They have 93,000, just under 94,000 cases, but over 12,000 deaths. They have a higher than 10% death rate in the UK. This is devastating for them. This is a big deal. I don't see them climbing out of this and bouncing out of this super fast. Not with these totals. I think they have a lot that they have to deal with. You know, obviously the totals in Germany were much better. You know, they had only 130,000 cases with only 3,000 deaths. You know, so they have one of the lowest mortality rates. But then once again, look at Italy. They have, you know, 1/4 of what we have basically in the United States, and they have almost the same amount of deaths. The same as with Spain, that has around 1/3 of what we have, and they have almost the same amount of deaths. So the disparity globally, we can see that it's basically less than 1% of the world's population has contracted this virus, and less than 1% of the people that have contracted have perished from it as well. However, these numbers are not that good yet in the UK. So I would say probably let's give this a little time, this rally, even though it's looking strong in the short run. Overall, it's a bear. We're just stabilizing right now. So it is helping to lead the charge, weaken the dollar index. But remember, we showed you all those other currencies where the dollar is actually being strong. So we're starting to see divergence now. We're getting back into that. The currencies are almost free-flowing again, but they're not. There's still that one fundamental with the coronavirus, but now the curve, depending on which country you're in, is probably the one buffer that's taking off the dollar out of the dollar component for now. So in other words, like the US dollar, Turkish lira, the US dollar, Mexican peso, like we showed you, absolutely the dollar still becomes a big factor when it comes to the coronavirus. But as the curves flatten in Europe, start to be mindful of the fact that the pound, the Swiss, the euro are most likely going to start to go back to free trading based off of their numbers and what's going on in the world besides the virus. So wait for a signal. We'll go once back again to the euro US dollar to show you how this has been going. This is one of our other majors, showing how this is helping to bury the dollar index once again today, pressing support to new or move lows. But be mindful, because just because we have a buy signal in the Mexican peso, and meaning that the dollar is a bull somewhere, it doesn't mean that it's everywhere. But remember, this has a good opportunity. This is a good chance, and it still means that dollar strength really is there. And if it does start to leak back, if there's a wave 2 that hits Europe, or the numbers start to go steepen once again, remember, those dollar bulls are going to come screaming back most likely. So with that being said, if you want to learn more about how to trade these patterns and recognize them when they happen, there's more than just engulfing signals. We want you to read the High Probable Japanese Candlestick Pattern book, and it's available on Amazon on Kindle and paperback version. Please check it out. Check out our videos. Subscribe to our YouTube channel, Forex Trading Unlocked, and check us out every day at www.forex-trading-unlocked.com. You can go through the navigation bar, find the analysis page, and it'll take you, and it'll show you the movie, not the movies, well, yeah, the movie of the video that we either just have done or is streaming live when you go on the page, depending on what time of day it is. So we have these signals. Remember, we're going to monitor that Mexican peso signal. Please, once again, subscribe to our YouTube channel, and we will see you